Larry, or no, panelist.
Dale, I think once you go in retirement, fishing should be your first hobby now that you've gotten used to waking up so early,
yeah.
right?
Yeah, no, I can't wait to sleep in. All right, Larry, welcome back to Face.
Dale, good morning. Thanks for having me.
I wanted to have you. I want to, first of all, congratulate you on smelling what it took other people a little longer to catch on to, and that was you saw things happening in some of the deep cyclicals. You liked Freeport, you liked Caterpillar, and they've been moonshots, nice performers. So good eye, Larry.
Thank you. Thank you. I appreciate that.
And we got some vaccine news. Didn't seem to have the same impact that we had last Monday. Kind of a mini deja vu. So I'm interested in what you're seeing here now. We're starting off with, there's Freeport. Yeah, what a nice base. And I know your style. You're still long, right?
Oh, yeah. Yeah, I'm definitely long. I've got right now, so you brought up the vaccine news, and that's good news. So obviously, I think last Monday was more of a surprise to the market. But I think now that we got the first good news from Pfizer, I think that everyone pretty much knows that there's pharmaceutical companies really all over the world that are looking on vaccines. So there's going to be more vaccines that come to market. Moderna came out today. There's going to be more companies. And what I think the market's going to do right now is try to do the balancing act between, we know that for the most part, there should be some vaccines that are widespread, maybe in the late first quarter of next year, something like that. But there's good news down the road. But what I think the market still has to work through is between now and then, there could be some setbacks along the way. Some of these states are starting to dial back some of their restaurant hours and things like that. So I think it's the balancing act between, we know that maybe 3 to 6 months down the road we've got some relief. It's just getting to there from here.
Yeah, and isn't also a missing element fiscal stimulus that it's hard to get accomplished when there's still a contested election, even though it doesn't look real contested. There's still no transition going on.
Sure. Yeah. The political, because also they haven't finalized the Senate races, and that could work its way into policy. So there's still some volatility and uncertainty out there. I think the VIX is around 23 or so this morning. So the VIX, it's been coming down, but it's still historically high. And I just think that that's something that what I've done is I'm positioned. I've got a little bit more than average cash. I'm over 20%. I think I'm 24% or so right now.
Okay, this is the highest cash level I believe that you've had since you and I have been talking to each other for the last 6 months to a year, correct?
I was a little bit higher a week or two ago, and in some of the volatility a month or two ago, I was a little bit higher too, just because the VIX is so high, and because the ATR on a lot of these stocks is still pretty high. So we know that there's still probably volatility, but what I'm doing with that cash is I'm putting it to work. So I am continuing to buy into these pullbacks.
Have the FANG and MAGAs gotten cheap enough for you? Because they really haven't participated. They're demonstrating from my work mucho relative weakness, and they were the darlings. And you were smart enough to go for some of these industries that were under pressure. Do you think that the pressure is going to continue in FANG and MAGA, just more out of valuation concerns?
Yeah, I'm pretty neutral there right now, so it's possible. What I've done, I've got really 4 buckets of stocks that I'm looking at. So I've got my cyclicals and my uptrend. So the buckets of like Freeport and Caterpillar, and if we take a look at some of these charts like Caterpillar, so uptrends just like this that are pretty easy to spot on the screen, rising moving averages, even outside of the cyclicals. Like you look at Agilent, which is in the medical equipment space. I just took a position in Five Below, which is in the small to mid cap retail space. So this is one bucket. Then the second bucket, I've got recovery names. So stocks like General Electric, Boeing, some of these names that are, that really got smashed on the way down. And now they're starting to come over the 200-day moving average. I've still got tech, but I'm holding. So tech has really started to disconnect itself. So I'm still holding the stronger uptrend. So I've got Qualcomm, I've got C, I've got Roku. But if you look at these charts, you can see they're still drifting to the upper right-hand corner. Where there is a concern and where I'm not doing anything is a lot of these momentum stocks. So, we could call them the at-home stocks. So Zoom,
Okay. Yeah.
Peloton. If you take a look at these charts, even Shopify, and Shopify's been one of my favorite stocks over the past few years. But what's happening right now, so a lot of these charts, they've got that look that they're starting to roll over. So you look at Shopify, lower highs, lower lows, the MAs have rolled over. So what I think you've got going on right now is the market is really starting to separate. And I think these momentum names, here's what I can tell you. I'm not chasing any of these names down whatsoever. So Zoom, Zoom obviously was a big winner, but you can see how the trend started to roll over. Now, here's the thing. If they come out tomorrow and say there's a problem with the vaccines, or, there's something that we didn't expect, then all of these names like Zoom and Peloton can go straight back up. But, I can't trade based on what the news might say. I can only follow the trend. So right now, I've got to tell you, like Amazon, I'm still holding Amazon. But these mega caps, they've been under some pressure. And if you look at Amazon over the past, 5 months now, so I definitely see the market moving out of some of this mega cap tech and into some of these other, cyclicals. I think cyclicals still have a way to go.
Okay. Anything that would tell you that we could have a 10-15% correction between now and year end?
Not right now.
Okay.
The only thing, the VIX has come down to the lower end of the range. One other thing, so and what I do, so the percent of S&P stocks, let's see if I've got that. Percent of S&P stocks, or this is the number of stocks over the 50-day moving average. So you can see it closed Friday, 423 out of 500 were over the 50-day. So that's at the higher end of the range. So could this tell me that at some point the S&P could need a little bit of a, consolidation, something like that? Sure. But as far as, do I see a 10 or 15% correction? Not right now. I don't see anything in the charts that says that. But we also know, the way that the news is right now, you never know what to expect.
Would you be buying some protection with the market up here? You talk about how cheap the VIX is. Is that attractive in any way to hedge some of your holdings by being long vol?
It's not. I could see how it would work. It's not really something that I do. What I try to do is I try to stay focused more. So the trend right now is an uptrend. So what I do is I stay focused on the primary trend. But what I do is I just adjust my cash balances. So having some VIX, having some volatility protection could work in here. It's just not something that I'm going to do. So I just rather have a little bit more cash to offset the volatility.
Okay. A couple of very unloved groups came to life as well. The banks, as yields started heading toward XLF, as yields headed up to 1%. I think that was just a psychological level it pulled back from. And energy, oil. So, oil about to make new recovery highs here. Wondering what you think of these two sectors.
I'm glad that you brought those up. Those are two good sectors, and I put together some charts before we got started today. So we'll start with energy. So energy, I don't have anything here right now. Energy is starting to show some signs of life potentially. So XOP, and I'll bring up crude oil in a second. So XOP, which is the ETF, really focused more on the mid cap and some of the large caps too. But we can see, and I posted this over the weekend on my members page. So it actually had the first close over the 40-week moving average going back to October of 2018.
Yeah.
So from a trend following perspective, this is something that catches my eye. It only closed over by a penny, but it is what it is. I mean, you can win the Super Bowl, by 1 point more than the other guy. So for right now, this is something that's on my radar screen.
Unless you call for recounts and many instant replays.
Instant replays. But
Super Bowl by 1 point.
Yeah. So Marathon. So this is another large cap energy. So what I do, I don't trade crude oil per se. Mm-hmm. The chart for crude oil itself, it's pretty much in a range. So if we look on the chart, let's call it 36 to 44 is really the range going back to June. So what I would say is, based on what the market's doing right now, obviously any good vaccine news or any reopening news is good for crude oil, but I look more at the equities themselves. Now, crude oil futures, if somebody's trading futures, obviously they can make a lot of money in the move. But for me, where I'm trading stocks and ETFs, I get a lot more upside from the stocks than, say, if I bought USO or something like that. But energy is definitely on the recovery screen, and also treasury yields. I'm glad that you brought those up, because yields are tied to the banks. So if we look at 10-year treasuries over the 200-day, and we can see these have started to break out. And I've been looking more at
by TBT and something like that.
We've got some people that are in TBT because bonds are definitely rolling over right now. So TLT's rolling over, treasury yields are moving higher. But I've been looking more at the regional banks. So if you look at the trends in some of the regionals like FITB, if you look at the ETF, KRE, so these started to hit the radar screen once they came over the 200-day. But I think what you're seeing right now is the market is definitely pricing in an economic recovery, and we can see that with yields rising, and we can see that with these cyclicals moving up. So I've still got some tech, but I've got more outside of tech now than I've had in, for the most part over the past couple of years.
Okay, so Larry Tentarelli on the shift, taking advantage of it. We had a pretty good break in gold last week, but the miners, Larry, seem to really shrug off the precious metals weakness. Still doesn't look great to me, but in comparison, they've been holding up pretty well compared to $100 down day in gold, and silver down $1.50 last Monday. Today, gold was down about 25. It's only 4 lower. So it's almost like today's deja vu is more muted than last Monday in a lot of different instruments. What do you think here with GDX?
I'm neutral right now.
Okay.
So I started when GDX had this move. So this was before the vaccine. So right after the election, before the vaccine. So it came back on the radar screen, but then they took it right back down. So for right now, longer term, GDX is still in an uptrend, and it's over a lot of support right here. But intermediate term, for the past 3 or 4 months, it's been in a downtrend. So for me right now, I'm flat. I don't have any positions there.
Yeah.
And I'd like to see it start to move back in the other direction before I tie up some money there.
Okay. Biotech?
I don't have anything there.
Okay.
As far as the charts themselves, so biotech can be pretty volatile. IBB is starting to pick up. The better trends that I'm seeing, like in the healthcare space, are in these, medical equipments and diagnostic stocks. So Danaher, $166 billion market cap. That's a pretty strong uptrend. We looked at Agilent, it's a strong uptrend. Thermo Fisher is another one. So the traditional pharmaceutical names, for the most part, have been dead money.
Yeah, they don't look that great.
Yeah, no, even Pfizer, if you look at these charts, that Pfizer gave back all of its boost. So, for whatever reason, here's what I will tell you is the market right now and for the past couple months has been positioning for an economic recovery. And in an economic recovery, higher beta stocks like cyclicals, banks, even some tech does a lot better. And the lower beta stuff like pharmaceuticals in a recovery move generally don't do too well. So there's still some tech names like Ericsson. Here's where I am seeing some good tech charts. So in the 5G and the telecom space, if you take a look at Ericsson, this is a pretty strong chart right where it sits. Corning is another one. You can see these are in pretty solid uptrends. Even in, but in cloud, I've got to tell you, cloud was my favorite space, let's call it, 6 months ago. But then you see a lot of these charts, while, cloud can move pretty sharply, but a lot of these charts, and I posted this over the weekend, some of these cloud names might not see these highs for quite a while or longer. And a lot of these charts, like a chart that's broken down like this, that's not something that that I want to get involved with.
Are transports part of the recovery theme?
Yeah, for sure. Yeah, transports. So off the top of my head, so FedEx has been pretty strong.
Yeah.
Some of the other ones, UPS has been pretty strong. I'm not sure who's in the transport index, but overall, these industrials and the cyclicals. I mean, industrials. So this is my #1 ranked sector right now on the website. It's been between #1 and #2 for the past 6 months or so. But industrials, if I had to pick one space, the industrials right now are pretty strong.
Okay. So Larry, since we're heading towards year end, do you have any philosophy like, towards this time of year? There's a lot of cross currents in the market, like tax selling and book squaring into the end of the year. Do you find trading conditions much more choppier after Thanksgiving going into year end before all the players come back?
Off the top of my head, that's usually a pretty strong seasonally, a pretty strong market. I think December is usually a pretty good month.
Okay.
This year, 2020 is, definitely going to go down in the record books as it's been
the craziest year in history.
I'll tell you what, you hit the nail right on the head, so you never know what to expect. I continue to expect. So like I started a position in General Electric about a week and a half ago.
Yeah.
Coming over the 200-day. And when I first took it, when they make these moves over the 200-day, that can be a pretty volatile space as money starts to get repositioned. But I think that, volatility, I'm still prepared for volatility. So even though these stocks like, Freeport and GE and Caterpillar, I don't not expect that, one day I think they come out and say, hey, there's a setback in whatever. And then you might see these cyclicals pull back. And then some of these momentum stocks start to move higher. So the only thing that I'm really expecting is just some volatility, but I am still focused on these uptrends. There's a lot of strong, if you look at even Walmart, Walmart's not the most exciting stock, but that's a great uptrend.
Okay. So would you say you're you have the most conviction about cyclicals throughout volatility?
I would say I've got the most conviction on the, 3 to 6 months out on the economic recovery trade. So banks, industrials, metals, the industrial metals. And listen, I still like tech, but I'm a lot more selective in what I'm going to do. So, I'm holding Roku. And as long as Roku continues this type of a trend, then I'm going to stay with it. But if for some reason Roku starts to do what, starts to roll over like everything else, then I'm going to get out of it. So I'm not anti-tech at all. I'm just a lot more selective. I've got Apple and it's been dead money for me for a couple months. I'd like to see it move higher, but right now, money's finding other places to go besides momentum.
Could I see Roku one more time, Larry?
Yeah. Yeah, that's a strong chart.
Yeah.
You know, it had a nice base breakout, consolidated, another breakout, another consolidation.
Yeah.
And Roku's definitely a momentum stock. You know, 196 to 255 to 207 in about a week or so.
That's wild.
But
yeah.
yeah, it's, you know, and I got into it somewhere in this neighborhood just off the top of my head.
Okay.
But as long as these charts, these tech names stay like this, and I bring back Ericsson again, you know, these are the tech spaces. Taiwan Semi, you see nice uptrends. Micron, so Micron's a very cyclical semiconductor stock, and you can see Micron starting to break out. So if I were looking to put money into tech, I'd be looking more at charts like that than I would be looking at these charts that, you know, start to break down.
More like the semiconductors.
Yeah, semis. I mean, look at AMAT. You know, these semiconductor and these are the most cyclical. So Lam Research, these equipment makers, you know, this is all good cyclical stuff. This is the market saying that we expect an economic recovery, and we expect that these semi companies are going to be buying equipment. So what the charts, you know, if we take out all the news headlines and what have you, the charts say right now that the market's pricing in, you know, further economic strength, and you can really see that in the bond yields.
Yeah. So with bond yields and 10 years yields heading up, what do you avoid? Utilities and housing?
I think the stocks that probably get hit the most from higher bond yields, the higher momentum, the higher growth, you know, the big valuations.
So like the Amazons.
Yeah, you know, the
Because
stocks
of valuations, competition on the valuation model.
Yeah, you know, these stocks that trade at 100 times sales, like I think Zoom is 96 times sales. Also, you know, home builders. So home builders are they're positioned good for an economic recovery, but they don't do as well in rising rates. So, you know, home builders, I'm 50-50 on for right now, but I'd be looking at the cyclicals, the banks, and I think these recovery names. So, like, you know, Boeing, and we touched base on Boeing a while ago. These names, they're going to be volatile. But if I look at where the upside, you know, on any recovery, let's say Boeing just gets back to where it was in February, and this could be, you know, 6 months out, it could be a year. But if I look at where the upside is versus if I had a stop at, let's say, 15%, it's pretty good math. It's the same thing with GE. You know, if these stocks start to recover, you know, GE's got, you know, maybe another 50%, you know, over time.
Okay, Larry, you want to show your website with the Blue Chip Daily? And you could follow Larry at LMT978 on Twitter.
Yep, here's the Twitter page, and I appreciate that. So it's at LMT978, and then the website, it's bluechipdaily.com. And then obviously you can go on and see what we do is we keep a running tab, so our best trade alerts for members. So what I do, I publish a top 25 stocks buy list for members every single Sunday. And then every day, obviously I'm on the Twitter feed all day, every day, posting ideas. But I just go where the charts take me.
Okay. All right. Well, Larry, I want to thank you very much for coming in here and updating us on your great work, and appreciate you taking the time to edify our community. Wish you a great fall trading season, and we'll have you back after the winter solstice and see what 2021 looks like to you. What do you say?
Dale, I really appreciate it. Thank you, as always, for having me on. I appreciate the opportunity. I hope you have great holidays. I hope the next time that we talk, we can look at some more uptrends.
Okay, Larry, my trading warrior brother, Larry Tentarelli, everyone. You could follow him on Twitter for those of you that are stock traders. Larry's got a excellent feel, very disciplined about his when he takes trades. He's not like me, doesn't want to try and get an edge, and here's the ice crack. So check him out. And that's going to be a wrap. See everyone tomorrow for Turnaround Tuesday. And don't just count your shares, tech, cyclical, anything. Count your blessings. And we'll see everyone tomorrow. Adios. You're very welcome, Horg Galaxy. See ya. Adios, Laura.